Warren Buffett once said, "I love dividends because they represent a direct return of money on your investment, regardless of what the market is doing." So, forget the myth that dividends are just a small bonus. They can be a powerful force to boost your financial success. If you're struggling to pay your debts, today we'll introduce you to 6 stocks with monthly dividend payments that can cover your debts. Get ready to be inspired and embark on a brighter future without debts. We'll explain what monthly dividend stocks are, their advantages, selection criteria, along with 6 powerful dividend options, and how much you'll need to invest. The required investment is even smaller than you might imagine to achieve a steady income of $2,000 every month. Monthly dividend stocks are a specific type of stock that pays dividends monthly, as opposed to the more common quarterly or annual payments. These stocks are typically issued by companies that generate a constant cash flow and are committed to providing regular income to their shareholders. The advantages of investing in monthly dividend stocks are manifold. Firstly, regular monthly payments provide investors with a consistent income source, enabling better financial planning, which can be especially beneficial for people who rely on these dividends to cover expenses or generate passive income. Additionally, monthly dividends offer a reliable cash flow that can be reinvested to potentially enhance portfolio growth and increase long-term returns. Moreover, monthly dividend stocks tend to be more attractive to income-focused investors, such as retirees, or those seeking a reliable source of passive income. The consistent and frequent dividends provide a sense of stability and reduce the need to sell stocks to generate income. Let's move on to the selection criteria. First, we look at something called dividend yield, which tells us how much money you can get in dividends compared to the stock price. But we also need to ensure that the company can continue paying these dividends in the long term. Secondly, we consider the company's stability, looking for financially healthy companies with a solid business foundation and consistent profitability. When a company is stable, we can trust that it will continue paying dividends. Finally, we examine the company's growth potential, meaning we seek stocks that have the potential to increase in value over time, in addition to paying regular dividends. By considering these criteria, we try to choose stocks that provide reliable income, have a solid foundation, and also have growth potential in the future. The stocks are ranked from the lowest to the highest yield, and in the end, you'll learn how much you'll need to invest to earn $2,000 per month with these stocks. Share in the comments if you already knew this information about monthly dividends. And let's continue with the rest of the video. 1. The first on the list of dividends to cover rent is Stag Industrial, which has a yield of 4.23%. Stag Industrial is a real estate investment trust, REIT, that focuses on owning industrial properties, specifically warehouses and light industrial facilities. These types of properties have experienced high demand due to various factors, primarily because the pandemic accelerated the adoption of e-commerce, leading to a greater need for warehousing. Additionally, ongoing supply chain challenges have resulted in increased manufacturing activities in the United States. These factors have contributed to high occupancy levels and rising rental rates, enabling Stag to generate consistent and growing rental revenue. Over the years, Stag has successfully increased its dividend payments, and a significant factor in this growth has been the REIT's ability to consistently expand its portfolio. Since its initial public offering, IPO, a decade ago, Stag has added over 400 properties to its portfolio, resulting in a diverse and strengthened income-generating asset base for the company. This consistent dividend growth makes investing in Stag Industrial more attractive. By investing in Stag Industrial, you can benefit from the REIT's focus on industrial properties, which have experienced high demand and increased rental rates. 2. The second on our list is Realty Income, with a dividend yield of 5.08%, standing out as the leading provider of monthly dividend stocks and self-proclaimed monthly dividend company. The company has an impressive track record, having paid over 600 consecutive monthly dividends as of early 2022. Furthermore, since its IPO in 1994, Realty Income has increased its dividend over 100 times, achieving a compounded annual growth rate of 4.5%. This exceptional dividend growth has earned Realty Income the status of a dividend aristocrat, with over 25 years of consecutive dividend increases. Looking ahead, Realty Income is well positioned to continue delivering a steadily growing monthly income stream to investors. In 2021, the company took a significant step by acquiring Varied, another prominent REIT. This strategic acquisition, combined with approximately $6 billion in properties acquired through smaller deals, is expected to increase Realty Income's cash flow per share. Moreover, Realty Income's reputation as a dividend aristocrat emphasizes its commitment to long-term dividend growth, providing confidence to investors seeking reliable income over an extended period. 3. The third on the list is Oxford Square Capital Corporation, with an estimated dividend yield of 13.5%. Oxford Square Capital Corp. operates as a business development company, BDC, a unique entity that functions similarly to a hedge fund, actively seeking lucrative investment opportunities across various sectors. Oxford Square Capital makes a variety of investments and focuses on companies that can be described as Goldilocks businesses, meaning they are neither excessively large nor too small. These companies typically have annual revenues of less than $200 million, making them substantial and viable entities, but not small enough to rely solely on local bank financing. Given the dynamic and ever-changing economic landscape, a BDC like Oxford Square Capital leverages its expertise to identify investment opportunities that offer potential attractive returns. While all investments carry risks, the company's diversified approach and focus on ideal-sized businesses provide a level of stability and growth potential. 4. The fourth on the list is Orchid Island Capital Incorporated, with an estimated dividend yield of 17.3%. Orchid Island Capital is a finance company specializing in residential mortgage-backed securities in the real estate sector. By primarily investing in these securities, the company generates revenue from interest payments made on the underlying residential mortgages. Like other real estate investment trusts, REITs, Orchid Island Capital distributes dividends to its shareholders, ensuring that at least 90% of its taxable income is shared with investors. If you don't have significant capital to invest in real estate properties directly, investing in companies like Orchid Island Capital offers the opportunity to indirectly participate in the real estate market and benefit from its income potential. 5. The fifth on the list is Armour Residential Realty Incorporated, with a dividend yield of 18.5%. Armour Residential Realty Incorporated specializes in government-protected residential mortgages, including debts secured by hybrid fixed-rate and adjustable-rate mortgage loans. Similar to other real estate stocks, Armour Residential REIT operates as a real estate investment trust, and as such, it is required to distribute at least 90% of its taxable income to shareholders in the form of dividends. This requirement creates a scenario for significant and regular dividend payments. It's worth noting that stock performance may fluctuate in the short term due to various market factors. 6. The sixth on the list is San Juan Basin Royalty Trust, with an estimated dividend yield of 22.5%. Before diving headfirst into this stock solely based on the attractive dividend yield of 22.5%, it's essential to understand the nature of this approximately $500 million company. San Juan Basin Royalty Trust is classified as a depletion trust, which means that, as a partner, the assets being acquired are fixed reserves of fossil fuels located underground. Returns on the investment in San Juan Basin Royalty Trust are based on the extraction and sale of these oil and gas reserves. Over the past 12 months, energy prices have been favorable for drilling companies, leading to inflated payments to investors of San Juan Basin Royalty Trust. Additionally, a significant portion of its reserves has been brought to market, further increasing the company's returns. While the energy market can be volatile, the potential returns can provide a consistent income source to meet your financial obligations. However, it's important to consider fluctuations in oil prices and associated risks. To determine the investment required to earn $2,000 per month, we can analyze the average returns of the 6 mentioned stocks and assume an equal investment in all of them. First, let's calculate the average return of the 6 stocks. The returns are 4.23%, 5.08%, 13.5%, 17.3%, 18.5%, and 22.5%. To find the average, we sum these percentages and divide by 6. Thus, the average result is 13.51%. This average return represents the average annual return on our investments. As we intend to generate $2,000 per month, we need to earn a total of $24,000 in a year. To determine the total investment required, we divide the desired annual revenue, $24,000, by the average annual return percentage, 13.51%. Therefore, $24,000 divided by 13.51% results in $177,646. So, to generate a monthly payment of $2,000, we would need to invest a total of $177,646. This amount takes into account the average returns of the stocks and ensures that our investments can generate the desired income monthly. Tell us what you thought of this video, and if the content helped you understand more about these stocks. If you liked it, don't forget to leave a like and subscribe to the channel. Thank you for watching, and see you in the next video.